All right, everybody, welcome to the show. We starting off with a bang here. Insert
Yay!
applause.
Yeah, we'll get a little button at some point, I'm sure.
Yeah.
So this is a little political cartoon series that I did, and of course, Trump's always saying that Hormuz is open. Iran's always saying that it's closed, except for after the MOU. However, I believe it was Article 4 of the MOU. It did stipulate that Iran would designate traffic through Hormuz, right? However, what and Trump's like they can't make deals. They're sleaze bags. They don't agree to anything. I don't know if he even read that MOU, Danny,
Mhm.
because the stuff that he was doing, like that MOU, like he violated it within like the first day of
Well, the
signing.
U.S. is known for doing that. Yeah.
Right, but it went even further where like the biggest thing was Iran said that they would make all foremost efforts, but that they would still direct flow and not collect tolls,
Hmm.
right, through Hormuz, and they would, do it like as as fast as they could, right? So, but they still said in the fourth section that they would control it. What the United States tried to do was open up a route through the Omani, through the southern region where Oman is, and pressure Oman to let the United States direct ships around the Omani coast. Okay, violating the fourth section of the MOU.
Hmm.
That started to happen, and then Iran basically said, no, not exactly.
So
Yeah,
yeah, that's the sometime later, 2 minutes
two
later.
minutes later,
Yeah.
boom. And that's exactly what happened, man. And I looked at the wreckage of it. There's three ships in there that are just bleeding out crude. One was a large carrier for natural gas too, and they're
Hmm.
just wreckage sitting on the Omani coast right now.
Wow.
And yeah, so it's like when Iran says that they're going to charge environmental fees. Now, at least, there's a good argument for that,
Yeah, that's fair.
because if you don't follow their routes, they're going to have to sink the ship. That's an environmental cost,
Yeah, yeah. So
right?
so you're getting a double whammy there. Um,
Exactly.
well, we can see what the impact on crude. So basically, we started off the week, maybe a little more than that, in the 67s, below 70, right? And in just 10 days or so, we're already back to 82. Um, obviously, we're in a hot war right now. And the strait's closed. So this is the same situation that got us up into the 100s, not too long ago.
Hmm. Right now, the hold on. You
Yep.
can go back to the price real quick. What I did was, as soon as I looked at the Brent futures price in particular, because that's the international market, not necessarily WTI, right? So they do track pretty close, but
Mhm.
usually Brent is a bit more expensive because more people are there to bid it up. Now, what I did was, as soon as the Iranians started firing at ships in Hormuz, I looked at the price of BNO. It hadn't moved yet, which
Mhm.
surprised me. So I just buy BNO, buy BNO, buy BNO. I was there, and then of course later on it shot up. Now here's the thing: it shot up quite a bit, so I could take profits here. No, 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 no. What we're going to talk about with relation to China and the overall
Sure.
supply situation, I the best satellite data that you can get from China is they have a large thirst for crude.
Mhm.
Okay. Now they've stayed out of the markets, and they've run their little, the teapot refineries or whatever. So all of their refineries, they're no longer exporting, or they were no longer exporting or importing oil. The math that I did showed they can only do that up to Q4,
Mhm.
right? Otherwise, it's just the thirst, because they're such an industrial nation, even though they have, gone a great way into renewables and electrification and everything else. Uh, there, if you look at the crack spreads, they want to buy the crude even at high prices, because then they can sell on the product end in the international markets and
Mhm.
get extreme cash. As
Right.
we'll see later, is the refiners are getting like heavy, heavy, heavy profits right now because the crack spreads are so wide, right?
Wow.
They're literally like, the crack spreads have never been this wide historically
Mhm.
ever, right? So we'll get into the VLO situation. I think I sold too early on VLO because now they're just raking in the cash.
Right, right. We'll
But
get to the stocks,
yeah, yeah, yeah.
toward the
But
end.
but yeah, as I was saying with China, um, they're disappearing now. The math that I did showed that they can push that if they want to Q4. The problem is by then, if they push past Q4, they would have eaten past half of their SPR. If you know anything about the Chinese Communist Party, they're not really, that's not how they roll.
No,
Not just
they're
that.
always very extremely forward thinking, like not just forward thinking,
Right.
but like generationally forward thinking. So if there's something that could compromise, if there's a risk, they're gonna be very risk averse about it.
Not just that, Danny, but who knows? Trump, by, if you're on the outside looking in, Trump's behavior just seems so erratic. Who knows? Maybe next he could take the U.S. Navy and try to port it over to the Strait of Malacca to cut off supply to China directly. So it's like, you see what I'm saying? There's both a monetary incentive for them to move back into the markets because they can get crude at discounted prices.
Right.
And on top of that, they can sell on the product side and then make that arbitrage opportunity.
Sure.
So there's all sorts of reasons.
Well,
for
and
them
it
to
helps to
actually,
mitigate the risk from Trump's capriciousness.
Right, exactly. So I estimate that they're probably going to start to come in. Well, they've actually started formally to enter the market now and bidding up oil, which is what we'll get to, is why I really like the Canadians at the moment, because they can export to the Pacific.
Right.
So, one thing with oil, a lot of people were like, I don't understand oil prices. They've been too low or whatever, which is true. However, the reason why we didn't see that upward $200 a barrel oil before was literally because China was on a buyer strike.
Right,
And
right,
they're
yeah.
such a big,
And we
they're
covered that
such a
here
big,
like ad
right,
nauseum. Yeah.
exactly. So with that said, they have now formally gone back into the market, and they said their refineries they're turning back on.
Well,
So
in fairness to them, they did give us a heads up,
they
right?
did, yeah.
And they gave us plenty of time to get our shit together. And, eventually China got to do China things.
Exactly. Now, it's a little complicated to go into shipping rates, but essentially, one thing that both Danny and I picked up that seemed really good because the prices were super low, especially when you look at like their profits and so forth. There were two that I liked. FRO was at a really nice price point right now, which is Frontline Shippers, and they own the largest fleet of VLCCs, very large crude carriers, on the planet. Okay. And they're actually rerouting now through Africa to essentially the Gulf of Mexico. Okay. So, but because trade routes are in such a pickle, let's say, they're getting like enormous rates per tonnage that they actually ship.
Right.
So they're just massively scooping those profits in. We talked about NAT before, but the reason why I like Frontline at the current price is because the biggest liability with the shipping industry is sort of like how old the vessels are. These are new vessels, and they have the largest fleet of VLCCs. And what we're going to see with Frontline, I almost guarantee it, is we're going to see Frontline actually exporting between Venezuela, the Gulf to Europe, Africa, and back to the Gulf again.
Not only that, but if you
Right.
recall, and it shows here on the chart, they pay a tremendous dividend too.
They do. It's like 8 or 9%.
Yeah, yeah. We'll pull that
yeah.
up when we review
Yeah.
it, but it's up there.
All right. So this is this is from the EIA, and these are the normal routes. And as you can see in about 20.9, right? Those shipments that normally have to. The reason why I have this up is because right around 3.7 and 2.9 is more Malacca, where 3.7 is roughly.
Right. Turkish Straits.
Right. Exactly. You see the trade routes that go over south and west. Now, what usually happens is we will get crude from the Gulf, and then that'll port over to New York. Then they feed that via transport and pipelines down to the Gulf of Mexico.
Hmm.
Okay.
Hmm.
The problem is those ships just aren't coming in anymore. Okay. Instead, what we're seeing is increased traffic right around 2.3, which is basically the Venezuela to the Gulf of Mexico route,
Right.
and then the route around the Cape of Good Hope.
Hmm.
Okay. So the reason for this is obviously that Hormuz is shut again. But what's even more important is the Houthis have started to come in the fight now, and they've already they started firing missiles to discourage shipping through the Red Sea. So when we're talking about tankers in particular, they can't take that route over North Africa anymore at all. They're going
Right.
to have to go all the long way around to Africa in order to get to the other hemisphere. So
Yeah.
that
Yeah.
means
If
those shipping rates are going to be sky high, which
yeah.
means those shipping companies are going to massively rake in the
If
profits.
only we could dig another Panama Canal across the entire
Yeah,
length of
right.
Africa.
Oh, yeah, that would be a huge infrastructure project for
Yeah.
sure. Okay, the reason why I have this one again, you're seeing where it normally comes in from the Middle East and then feeds down to the pipelines to the Gulf of Mexico. And here we have the pad system. But what we're seeing again is increased traffic tremendously. And Pad 5, I would like to talk about a little bit
Sure.
because I got some friends that are in Pad 5, California, Portland region, and it's really not looking good. They actually have the largest SPRs themselves, but they actually have to, because of I don't know if it's environmental, it's a whole mesh of issues, but essentially they have to import from the Pacific coast,
Hmm.
which is like super expensive. And now they basically they have to cut deals and bid up the oil with South Korea and Japan.
Hmm.
Right.
So
That makes
aside
it
from
yeah.
Hormuz, we're still tripping over our own feet with these
At
types of
least on the
policies. Yeah,
at least on the West Coast. Yeah.
that doesn't
I and
surprise me.
I believe that in the future, at some point, when the people get pissed off enough on the West Coast, because their fuel prices are like $3 higher than they are
They're
over in
integer
our past.
dollars more than us
Right.
here on the East Coast.
Exactly. So, and we've seen the main Western commercial storage inventory. Uh, that's I think it's called Cushing's Hub.
Cushing, yeah.
Uh, yeah, Cushing's is just done with,
Hmm.
and of course, as soon as that commercial inventory dropped down, gas prices and diesel prices just shot way up. So, if I'm
Yep.
looking at sort of like if this closure goes long enough,
Hmm.
the shutdown that we're going to see likely isn't going to be the East Coast or Midwest. It's going to be on the West Coast
Right.
of the United States. That's where things like trucking
Sure.
and like actually like groceries getting to the store and so forth, they may not have the diesel to do that. And
Right,
that's going
and
to be a big problem.
I know that also the West Coast, in particular California, I think is implementing a bunch of these environmental restrictions for which they're extremely restrictive to diesel trucking, right? So they're basically shooting their own feet from multiple angles with their own red tape.
Similar to the EU.
Yeah, yeah,
Right.
very, very,
Very
very
similar.
much so. Yeah.
Yeah. And this will get into when I looked at this geostrategically, man, Ukraine has had a lot of success hitting the refineries in Russia. So
Hmm.
much so that it's cut back their refinery output by about 40%,
Wow,
which is huge. They're
that's
rationing
tremendous.
diesel. They're rationing
Yeah.
diesel and all
Yeah, I
sorts of
hear
other
that there's
fuels.
like long, long lines. We're back to that communist style rationing of fuel, and yeah, it's getting bad.
Yeah. So with that said, Russia is a big swing producer, and they have historically at least exported, right? That's another reason why the crack spreads are as high as they are, because refineries have been hit in Russia. They can't
Hmm.
export things like diesel, jet fuel, or even gasoline, right?
Hmm.
They're rationing their own consumption. Okay. So what we're going to look at is why I said I sold Vielo way too early was
Hmm.
because, like, man, like the safest, the most efficient, and the highest producing, uh, as far as like jet fuel, diesel, gasoline, and so forth, those petroleum products, are really like VLO, Marathon, and I believe Phillips 66. But I really like Marathon, Valero the most though, because
Yep.
they don't have any assets in them to lease either.
Great. So with that, that brings us to our stock selections. As you see, I've grouped them because they're kind of grouped by category or subject or whatever. VLO, speaking, Zach just mentioned it. I think that that's a great place to start. Um, Go ahead. Whoops, not CLO.
Now think about this: VLO is one of the most efficient top refiners in the world right now.
Wow. So
Right?
if you recall when we not to interrupt you, but if you recall when we did our analysis previously here, I'm sitting here like, this is too expensive, and I got to
Mm-hmm.
wait for a dip. In fairness, I did highlight. I remember I did highlight 244 and 235, which it did hit. But look at this, right? So
Mm-hmm.
had you taken on this trade, admittedly it's expensive, but you would have pocketed almost $100.
Now, and it's going to go up and to the right
Yep.
until maybe 2028,
Yep.
Danny. This is like, because as far as like, there's just no other competition in the world for refined
Right.
products. That's just how it is. Like, and
Yeah.
you can't just create a complex refinery. You know
Yeah.
what I mean? So it's like
Well,
there's
and
no
even if you
there's
could, there's like physics involved. Like, it takes a while to get those machines started and to keep them
right.
running and to maintain them. It's not, it's not like a tech startup. You know what I mean?
Mm-hmm.
Where you
Right.
get an AWS account and throw some services on there and you're good to go. No, this is actually physics here.
Right.
Um, so yeah, Valero, favorite of the show. MPC, is that what we right? NPC, yeah. Okay, so another up and to the right. I'm actually going to draw this because I think, and I was correct. I drew it this way because essentially we have a behavioral pattern here, right? And this is clearly a breakout from that pattern. So this is like a
Mm-hmm.
chunk O behavior. And then we have a breakout from that already hitting the target. Obviously this is in hindsight. But again, this is the power of Fibonacci levels. Not to sell this again. Notice how nicely things line up. I know, a lot of people think it's magic, but it works. So, and there's reasons for that. But why
It
don't you
doesn't. Here's the thing. It doesn't matter if it's magic or whatever. If the process works and it has predicative capacity, you use it anyway.
you use it anyway? So yeah, there we go.
Just because we
And
don't understand that pi, just goes up, or maybe it doesn't. Nobody knows.
yeah,
Doesn't mean pi just using three but the value of pi, knowing its use case, that it doesn't have all sorts of
sure.
applications
And
just
you would
because we
know
don't ever understand every aspect of it.
you
Right.
would know better than I on how little we know about why anesthesia actually works. Are we
Mm-hmm.
gonna not use it?
Exactly. Yeah. Dental procedures would be way, way more
Yeah,
painful
that
if
would
we didn't.
suck.
Right.
Yeah,
We just know it works though, and it's respectively safe.
it
So, yeah,
it does what it does. So hey,
does what it does. We use it. Right.
Yep.
Exactly.
So great kind of little aside there on the Fibonacci's. Our next target is 338. If I was looking to enter, you know, obviously this is off to the races here. I would hope that it might retrace to like 296 from,
Mm-hmm.
813, but this is one that, if due to the same reasons as Valero, yeah, this is one I would probably ape into.
Yeah. Yeah. If you're going to do one of them, yeah, either Valero or this probably.
Yeah.
Yeah.
PS6. Oops. All right. So yeah, so this is nice because all of these in this kind of behavioral group, if you will, in this class of selections is kind of doing the same thing.
Right.
Again, partitioning by behavior, we've already hit the first target at 207, but 229 should be pretty easy to hit here once excrement hits the fan, so to speak. If we're stingy, we could potentially look for a retracement to 197. But again, I just feel that everything in this basket is something that Put it this way: if it retraces on you and you're holding 5% under, it's not going to be for long.
No, not at all.
BNO, I believe that was the one. If
It's Brent. Yep.
Yeah, that was that the one where I told you I got no, I guess not because I don't have a little red line
No,
here.
yeah,
Yeah.
I got in BNO because
Yeah,
I saw that China was starting up its refineries again.
yeah,
So I was like,
I have and we'll talk a little bit about anecdotes on investing later at the end,
mhm.
but I just I'm trying to build a growth account, so I'm trying to like take things that I know are not only going to go up, but will provide value and dividends, right? And so the
Right.
fact that this didn't have a dividend, if I recall correctly,
No, this is
but
a short-term play. Let me be clear
correct,
about
yeah,
that. I'm
yeah,
probably going to hold this on either until oil just shoots up, right? Just it just shoots up because China
exactly,
enters the market,
exactly,
or infrastructure is destroyed in the middle, whatever. But I'm
100%.
holding this until maybe October,
Yeah,
November,
which
something
is a
like that. Yeah.
perfectly valid approach. Basically, you're swing trading it. Yeah,
Yeah,
so certainly
exactly.
nothing wrong with that.
I'm just
Uh,
gonna make that delta and
yep,
get out.
and put it into other things.
Yeah.
So I guess we'll move on to the second kind of batch here, FLR. Starting off with this guy, immediately I could draw the level, see nice
Well,
alignment. Yeah, go
there's a
ahead.
thesis. There's a thesis for these though. I
Sure,
mean, we could talk about these
please
later
do.
if you want, but the whole thesis here is these. I wouldn't worry about the price action very much. You see how it goes up and down or whatever.
Sure.
The
There's a
key
range.
thesis, the key thesis here is just gonna try to get in at like the lowest possible price point. Don't worry though, because there's plenty of time. These are going to fluctuate for quite a while until about either the war's over, we're out of SPR, and or 2020, 2027, right?
Mm-hmm.
By 2027, though, these things are going to skyrocket. Why? We'll be out of SPR, okay?
Mm-hmm.
By then, if we drain the SPR, okay, it would have collapsed, okay? So we can't reuse those same salt caverns or whatever.
Right.
Even though that's the case, so what's probably going to happen, what will happen, because it will be necessary at some point, is for there to be more, so something like this doesn't happen again and our SPR's empty. All of these companies, these groupings, are companies that basically are responsible for creating the above ground storage,
Mm-hmm.
right? Those sorts of like things that either hold crude
I see.
or other hydrocarbon products.
So this is actually a really good heads up then, because it's things to be planning for as the situation evolves, right? So going
Am I
back to
seeing an Elliott wave there? Like on three of
absolutely.
them?
Yeah,
Three of them, I
absolutely.
think. Yeah.
There, but specifically, what I'm focusing at here is this Head and Shoulders. Recall that a Head and Shoulders, I mean, it's pretty self-explanatory, but the behavior behind it is like, okay, we attempted to make a high, and then we retraced a little bit, attempted to make another high, and we did. But the third try, we fell short again, and that's usually a harbinger of we just couldn't get to a higher high, therefore lows are in store. It's a
Right.
pretty reliable indicator. I'm often the biggest skeptic of technical analysis. I only use the most reliable things that I've seen tried and tested. And interestingly, when we kind of use Fibonacci, basically this is the inverse Fibonacci, the Fibonacci extensions, but to the downside. The reason why I'm doing this is giving us ideas because, again, as Zach said, we have some time on this. So if you're a little bit more stingy, you could kind of hang out to like if this breaks down, very easily hit $45. But also look at the bottom of our little Elliott wave sawtooth here. That's 43, right? So I
Yeah,
think that
that's what I
yeah,
would go with, honestly,
yeah. So
because it's going to take some time for this to
correct,
build.
yeah,
Yeah.
yeah. So set a 60-day limit order at 43 or 45, and you got a good
Put it
price.
out. Put the limit order out 3 months or 4 months or whatever.
Correct, yeah, you could
Yeah.
set it.
Yeah.
So the next one is Aptim. Oops. Okay, yeah, I figured it would have some problems with some of these. B T. Okay, it has this one. Okay. So let's zoom out a little bit here. Why don't so same kind of deal with this guy? Actually, so this is the importance of understanding time frames because I look at this. Or better yet, if I see this, I'm like,
Oh
but
no, yeah,
but if I do this, it's like, okay,
never
you
mind.
know,
Right,
yeah,
exactly.
yeah. So um, as such, I'll probably use this time frame to draw the Fibonacci's. Just we're isolating this Elliott wave here. Good news is I could actually draw it. You can probably see where I'm going with this. Is that the Elliott wave is looking something like this, and recall that the corrective phase looks something like this, right? With the ABC,
Mhm.
right? So there's this one has five, this one has three. And we're basically right there at 165. That would be what I would be eyeing, or 146. Again, long-term
Mhm.
limit orders here. I think that those
Yeah.
are great entry prices. And for the reasons Zach said, that this is, you got time on this one.
Mhm.
Whoops. Um,
Oh, car amps. What?
yeah, uh, got ahead of myself there. Um, Another one, M Matrix. This one's
I like this one most of all, to be honest, because
I
if I'm
like
not
it too because
mistaken,
it's very low price.
all right. Here's why. It's low price right now, but not just that, is they actually have a monopoly in the United States for the castings necessary for those silos, for those crude oil and
Uh-huh.
product silos. So it's like if they're right now it could even go a little lower or whatever, but who
Sure.
cares? The idea is you can accumulate here at low prices for months or whatever,
Sure.
and then come 2027
Well,
or whenever we run out of SPR and the federal government's like, we need more storage, we need more storage. You see what I'm saying?
yeah.
This is just, they're going to get all sorts
So
of
I mean,
contracts.
again, we always want to be, as picky as possible with our entry prices, but at the same time, $10, So
Right.
we're looking at we're here right about 12, but notice this oscillatory behavior here. That's called a range or a value area. So it's highly likely that again, given time, because we do have time on this one, that we could come back here at 991 and test, and that would be the perfect time to load up. Just chill for a little bit, wait for it to kind of wiggle waggle, again, technical term, and then scoop some up down here again when we test 9-10 bucks again. So
Mm-hmm.
good strategy there. Moving on to the second one. Again, I'm not sure if this one's going to load.
No, it's, no, I think you have,
VPK.AS.
yeah.
Can I ask you a question? Nope.
Mm-hmm.
So yeah, it's not happy with that one, but we can
Okay.
move on to KMI.
Kinder Morgan. Yep.
Yeah, this one's nice. This one is
Kinder
a up
Morgan's
and to the right.
a mid streamer too.
Look at
So
this.
they
Beautiful.
operate toll booths and they're an engineering company. So it's a double whammy there.
Yeah, so
Yeah.
that's if we take a look, I'm gonna focus in again. If you recall, we call these things dragon head patterns. This little thing looking here, that is a term I made up, by the way, but it's a technical term because I say so. Um,
Mm-hmm.
the key, I didn't just make that up. A dragon head pattern is actually a very well-defined behavioral phenomenon, right? By which we have this awesome rally forming the neck of the dragon. Usually have these kind of like pokey things, again, technical term, as we establish a high. And that forms his like horns or ears or whatever you want to call it. Then we kind of like come back down here and equilibrate for a little bit, which is a good thing. That is the market's kind of, re-equilibrating, accepting the price, digesting it. Buyers and sellers are kind of, we're forming liquidity,
Finding
right?
the new finding the new floor.
Correct,
Yeah.
correct, exactly, exactly. So as we find this new floor, it's usually a Fibonacci retracement, a retracement level here at 618 at 3125, and this is what like the snout of the dragon. Now, how you trade this pattern is you're going to want if you already missed out on this move, which obviously we did, I did anyway. This
Yeah,
is
I don't
something.
own Kinder Morgan yet. Yeah.
Yeah, this is something you want to wait for it to equilibrate and see what it's doing. Okay, and the reason why I say that is there is a risk, and there is a risk that it will break down. I'm not saying for this one in particular, I'm just talking the technical pattern in general. The risk is that it breaks down and retraces all of this neck. The reason why that's a risk is because when you break out like this and you have this empty area, we call that a vacuum zone. It's called a vacuum zone because there's no liquidity. And what happens when there's no liquidity? We sail through it until we find liquidity, which means that, again, the downside risk is that it breaks down. I don't think that that's going to happen with this one. Look at the technicals here. We still see strong, relatively strong buying. We've solidly established a little liquidity zone here in the snout of the dragon. And yeah, we're just probably going to range here, dipping to support at 31.25. That's my level. Until we break out and form the next dragon head. So that's my technical position on
yeah,
that.
what's the dividend on this one?
Let me find that out real quick. So 3.61. That's not too shabby.
No.
Put it this way, like my one of my all-time favorite selections is Exxon, and it's like 2.7, right? So it's not what I call a dividend king, but it's handsome. And also don't forget that the stock price is a little higher, right? So a lot of those ones that are paying like PBR, for example, is paying 14, but it's like $16, right? So
Right.
you have to count that take that into account as well. So again, good dividend payer, and you got time on this one. So very,
I don't know.
very good.
I don't know. I'm saying around the 30s for this company. That to me personally kind of tasty.
Sure,
I mean,
sure. No,
that's not
absolutely.
bad.
Again, this is a long-term selection. So, the idea is that we'll have another Dragon Head breakout, which means that we hypothetically will break 34.70. So anywhere in here that you get, in my opinion, is a good price. With the absolute low here being 31.25. So that's when you can kind of set it and forget it, set a limit order, and move on. ET is one of my personal favorites. I have been in this for a long time.
Yeah.
I've been in this since I want to say like $6. I'll have to fact check myself on that one. This is you're not going to hear any arguments from me on this one. I mean, just look at it.
Well,
But why don't you?
I
Yeah,
can add. Yeah, I can
sure,
add to
please.
that. I got into ET because for several reasons, but um, when I compared like my account versus Danny's account, I was like, wait a minute, I thought I got in ET, but I hadn't for whatever reason. You know what I mean? So I was
Happens.
like, oh yeah. So I got in at like 19 or something like that. I think that was I think that was the price.
Yeah.
And when I looked into it, ET in particular, here's why. Okay, so in order for the refiners to actually do their job, when they take the WCS, the West Canadian Select,
Hmm.
they have to actually dilute that because it's like hard bitumen. They have to dilute that with
Sure.
the shale that the U.S. producers, do have via fracking, right?
Hmm.
So, in order for the complex refineries to make jet fuel and diesel and stuff like that, they need to mix the two.
Hmm.
ET, they actually, I believe, have the largest footprint for the storage, the storage casings where they mix the two
Okay.
to then feed into the refiners.
Yeah, I
See,
remember. It's
right,
been a long time since I looked at that. I bought this back in the Ghost Squawk days. That was like,
right,
6 years ago,
right.
5, 6 years ago, something like that. And I knew that they had like a specific niche that I was like, oh, I gotta have this. And I'm glad that I did. I'm
Yes,
glad that I
their
purchased when I
footprint,
did.
their
Yeah.
footprint in the Gulf of Mexico is substantial. So it's
Yep.
like a key hub
Hmm.
sort of to own in the current energy regime that we're going to have moving forward.
Yeah, yeah,
Yeah,
absolutely.
yeah,
Because again, we're talking about kind of a paradigm shift here.
right.
Not just in terms of the current situation, but if you kind of extrapolate forward, we were talking about a sector rotation entirely, right? So this is one that you want to own in both cases.
Right.
Okay, EPD. I believe we've covered
We've
this.
covered that. Yep.
EPD. Yep. Okay, yeah. So let's do a little zoomerooski here. All right, and we see again. I have a red line where I purchased. So being
Mm-hmm.
completely transparent with the viewers, I'm clearly in the money here. It did dip a little bit below, but remember, and we brought this up plenty of times before, is that a lot of these selections probably will dip lower. That's great. You're getting a discount, right? And this is a great example of that. So, if you've been kind of following this show and seeing like, oh man, some of these picks are underwater. Well, this is what we've been preparing for. So,
Yeah.
this is a common theme with our
Yeah.
selections.
We got in at the same time with
Yep.
EPD. Yeah.
Yeah.
So,
So
and I'm happy with that too because they pay a massive dividend and they operate like a toll booth. So.
they do. Yeah, pretty much. Yeah, they just sit there with their hands out. Yeah,
Mm-hmm. Yep.
that's just literally collect money.
Yep.
All right, so moving on, Sunicore. Oops, SU.
Okay, now let me segue into this.
Sunicore,
Okay, see,
Suncore.
see, now we're starting to see it, Danny.
Yep,
The thesis that what we're starting to see now is the overall thesis
coming together
starting to come together to
and
play
play
to the
out. Yep,
upside, right?
yep.
And we're gonna witness this. I can't guarantee it, but I'm almost certain that there's going to be two legs of this. We're past the first leg, and this is going to be like the second leg of the journey up and to the right for the most
Absolutely,
part.
and
Right.
I could even kind of pre-impose some Elliott waves here. If we hit either this or this, and then we retrace a little bit, we're going to see this. I'm not going to finish it because that's going to be off here, but yeah, that's perfectly reasonable. Is that sure? We might see a little retracement, but this, as you mentioned, and I need to stress that that's the first leg of the up and to the right, as more formal term, the impulse wave.
Right. Now, the reason why this one's important is that this is a primary Canadian producer, right? It's CU, CVE, and CNQ. Okay. Now, all three of those companies, they produce West Canadian Select, and the toll booth operators that we looked at previously, they own the infrastructure that pumps all that stuff through the United States, from Canada and back. Okay, to the refiners in the Gulf of Mexico.
Yep.
So, yeah, part of this whole new, and this is what I'm talking about with a new energy regime in the future, long term, the United States will just not no longer have a place in the Middle East.
That's right.
That
I mean,
regime
we're
is
already
over.
seeing that like starting to take place. Yeah. Uh,
Exactly. Right. So what we're going to see now is a new energy and infrastructure regime necessary in the Western Hemisphere.
yep.
So what you're going to do is you're going to have companies like PBR, uh, Chevron, and because Chevron's selling the Venezuelan
hmm
oil, the VLO, all the pipelines, and then the Canadians. The reason why I like the Canadians so much is they have the TMX that they're going to expand, by the way, so they can export more of that stuff out the Pacific.
Yep.
What does that mean? That means that even though they'll probably have cheaper contracts to the United States, they would want to sell most of their stuff to the United States. The fact that they could sell off to the Pacific means when that Brent shoots up, the WCS is going to shoot up too,
hmm Right.
because they're going to bid each other up.
Correct. Correct.
Yeah.
And another bonus, 2.78% dividend. Sure, not as
Mm-hmm.
high as the other ones, but also take a look at the price. Right.
Now, Danny
Yep.
and I, when we looked at some of these, we've been like, oh man, this has been kind of disappointing or whatever. But given time, letting the thesis play out, we're finally starting to see this really start to grow off in the
Correct.
direction that. Right.
Exactly. And this is a great example
It
of
was the
that.
great accumulation phase right there.
This was perfect because clearly I did this on a previous podcast. I don't have it in memory right now, but just looking at it, I can kind of rewind and imagine what Danny back a month ago said. And I probably said something along the lines of, guess what? We're having a head and shoulders pattern. I drew my Fibonacci. If it breaks down, it's going to hit the 618 or the point 0.5, in which case
Collect there, right?
collect
Exactly.
there and we're off to the races. And it's just so beautiful to see the strategy come together because it's not that
Mm-hmm.
hard. Right. And it's not
Right.
magic. It's not
And
some like voodoo technique or magic indicator. It's just math, really.
how okay, and that's a relatively inexpensive stock in USD, right?
Yeah, still, it's oh shit, this is CAD, my bad. But actually, it should. Oh, come on. Okay, so I don't know why we were looking at that in CAD.
It's a
But
Canadian company. Yeah.
fair, yeah. Well, that that would do it. But yeah, if we redraw this, oh, okay, I understand why because this is not offered on the NYSE. It's TSX, which is the Toronto Stock Exchange. It's their stock exchange, so it's going to defer to Canadian dollar. Yeah, that makes sense. But yeah, either way, we same idea, same pattern happening. It's even cheaper in U.S. dollars because
Right. Right.
The Canadian dollar is like monopoly money. I mean, it's just
Yeah. It's not even like, I don't know. I used to joke, say it's like, how you go to like Disney World or something and you have to pay for the Disney bucks. I
exactly.
say
Yeah,
that the loony wasn't even that. Like it
yeah,
was.
yeah. It's just like a voucher.
Right. Exactly. But with that said, and that's a joke in relate the USD's relation to the Canadian loonie. And
it is,
my uncle lives in Canada, and he said that's the only thing he hates about living in Canada is the
actually,
fact
for
that the
me,
Canadian dollar is just not.
for me, it's
for us, it's reversed.
for me, it's the opposite. I love when I go to Canada because everything's on sale. And
Mm-hmm.
you know what, like whether you know it or not, it's on sale. Because
Mm-hmm.
when you go there and you look at the prices, like the number looks like ours. You know what I mean? It looks like what it should cost here. But when you actually go and pay and you look at your bank account, you're like, wait a minute, because
Right, it's
the
like 30%
disparities, yeah,
cheaper. Yeah,
it's
exactly.
about
Yeah,
30% cheaper. Yeah. And
yeah.
and for those of you in Canada, I am saying this with love because I lived there for 3 years and I have a lot of
I
friends
love
there.
Canadians.
I
I've got
consider
a lot of friends
myself an
there.
honorary Canadian.
Yeah.
Um, had to throw that in there.
But what I'm trying to say, Danny, is if people have been following this, in any of these podcasts, they would have either accumulated somewhere within that range or used the opportunity during that little consolidation when oil
Correct.
was cheap, and then say, oh, this is a really good buying opportunity, and then we're off to the races.
And we're seeing another example here with the Canadian natural resources. Almost the exact same situation here. I guarantee you, when I drew these Fibonacci's, I was looking at the 618 and the point 0.5. Those are my favorite levels to kind of accumulate at. We hit both of them, and again, we have this nice pivot as we take off here.
Right.
Uh,
And the only reason why I don't like looking at these now is I can't like I don't have
you just don't have enough to,
I just don't I can't I wish I see them at these low prices. I'm like, man, I wish I could get more of that.
Yeah,
But I
yeah.
just can't at the
Well,
prices.
again, I literally doubled a portfolio off of what I call sprinkles. Like whenever you have $100, spare $20, I
Right.
call it you sprinkle on your plants, watch them grow.
Mm-hmm. Yep.
The next one is an all-time favorite of the show. That is Petrobras,
Mm-hmm.
Petróleo Brasileiro. And as you see all these red lines, I have technical analysis the shit out of this with the Elliott wave and the Fibonacci's. As you see, there are multiple red lines here indicating that I have accumulated this quite a bit. It's a favorite of the show for a reason. If you recall, this is a darling of Brazil as a country. So they've been around forever, and this is something that Brazil takes great pride in, as they should. Additionally, they pay just titanic
14%.
dividend.
Yeah. 14% or
Oh, so
something.
that's yeah. I want to say it was 14. I'm trying to get to it here. Where's the dividend thing?
It's high.
Um, it's high. It's a 5.5. I don't think that that's accurate. I recall it being much higher than that. But
Yeah,
either way,
but
it's very,
that's
very
still
high.
good. That's
Yeah,
still good. Yeah.
even if it was, yeah, that number can change. But even if it does, that's still phenomenal.
Now, the
Um,
only drawback that I have for PBR in this scenario is that, if I'm not mistaken, I think they only pump light sweet.
yeah,
They don't do the sour crude
I
like the
that
Chevron
that
does and the
I
West
don't
Canadian Select.
see as much of not that it's not there, but it doesn't have as solid of a niche in the markets as some of our other selections. That
Yeah,
that's
yeah,
the
yeah.
only
That's the only drawback
yeah.
that overall. But look, just as a big producer though, just compare that to Devon or Permian Resources. Like, you know what I mean? Like this is
Yeah.
way cheaper in respect to even
Right,
those
right. So why,
assets.
on that note, it's not on the list, I don't think, but we may as well bring it up. Devin, same type of behavior here in terms of the retracement and the subsequent, rally. And again, perfect agreement with the Fibonacci's, but notice the price point, right? So again, if you're
Mm-hmm.
living paycheck to paycheck, maybe you could remove some toppings on the burrito for a week, come up with $20 or whatever, get yourself some PBR. You won't be disappointed in that 20 years
Right,
from now.
right, exactly.
VLO, I have this in here twice, my bad. CVX, that is Chevron, is that right?
Now Chevron,
CVX,
because
yes,
they're the ones who
CVX.
struck the deal with and they're still relatively inexpensive as far as the
Damn it,
space
I
goes.
should have set an alert here because 162 is a bargain for Chevron.
Yes, it
Uh,
is, because they
happens.
basically have a functional monopoly on all of that Venezuelan
Oh yeah,
oil.
and this is a company that's also too big to fail. There's no way the U.S. government is going to let this company fail.
No,
It's right up there with Exxon. So
right,
um,
yeah.
I You snooze, you lose, and I snoozed on this one. So, yeah,
Yeah.
definitely have this nice little rally here. Speaking of it, let's take a look at Exxon. I know that Exxon, we have cautioned about, and I do remember very distinctly because this is one of my all-time favorite selections. But I have this head and shoulders drawn here. We did see the subsequent breakdown hitting exactly the target, a little bit lower, and then we have the nice swoop up. I still think that there's some risk here. However, I would stand by the defense if you did take our advice and you were looking at that and you did get in at 139 or the low here at 135, then you've done good.
Well, here's the thing. Exxon does have a lot of assets in the Middle East,
That's the
Saudi
risk.
Arabia, and
That's the risk.
Qatar that,
Yeah.
that can be hit. That's the only problem. However, they still also have a lot of those offshore rigs that are still producing
Oh,
really,
absolutely.
really
Yeah.
well
So
too.
that's
So
just infrastructure obviously has a cost. It is a physical thing. It is not a cheap thing. So when you lose it, that sucks. But the good news is that they're worldwide.
right here's how I'm looking to play Exxon. Okay, what I'm looking for is I expect Trump to keep on going back and forth with Iran, Hormuz, and the whole deal. In fact, when I looked at what the military is doing in the region, it seems like they're doing what's called shaping operations in order to take some land either on the coast or a couple of those islands in order to get sort of like range of view over Hormuz physically.
Mhm.
Now, that's a really bad thing to do for many reasons militarily, but when has that ever stopped him?
Yeah.
So, you see, so anyway, with that said, I could see where, especially Trump said that he was going to start to hit their energy infrastructure, and he already has started to hit some of the infrastructure, including the energy infrastructure. And right now, they our special operations group in Syria,
hmm
as well as in Kuwait, they've been hit hard by Iran,
hmm
and the energy infrastructure of Kuwait started taking all sorts of damage. So much
Right.
so, where internally they're rationing fuel now.
Yeah. Yeah.
Okay,
So
so
we have the rest of the Gulf countries who are hit in the crossfire, and they're just trying to survive.
right now, what the point that I'm making though is what I'm doing, since we have time, is just wait for this, and as soon as like those that infrastructure gets taken out, right? At least wait for that, for the infrastructure to get taken out, and then watch the stock drop afterwards, and then scoop up
Sure.
and to
And
get really good bargain prices.
absolutely. So I believe that we've been seeing this rally here across basically every single selection we've looked at just because of the nature of how we made them. You can't just say, "Oh, this is the start of the next leg of the impulse wave." You,
Not for
we
this one, no. Yeah,
correct. Because the reason why we're seeing this on everybody is because
oil's
of
going up. Oil's
exactly,
going up.
exactly.
Yeah.
So it's because of this. Okay, so that's the reason why we're seeing this on virtually everything. That does not necessarily mean it's going to continue. And I just caution you that there's a risk here with Exxon in particular for that reason.
Right. As far as this price point, though, I'm waiting for their infrastructure to get taken out. Then I'm buying.
Right.
So
FRBO. This is the final selection for today. Again, unfortunately, we don't have a big, a lot of time here. This is actually only a couple months of data.
mm-hmm.
It's not looking too good, but
Nope.
however, I do remind you that IPOs, it's very difficult to judge an IPO by the performance of the stock in those first few months because they do tend to take a little dip as people take profits and there's all sorts of shenanigans. And you have to understand, okay, if the person who offered the IPO did a good job at evaluating the value of it in the first place. So I would caution you that just because you see this, again, I call this the death spiral on a stock that's only 2 months old. I wouldn't put so much. I wouldn't put as much faith in this as if it was a pattern that we've been seeing for the past 5 years.
Right. Now, the reason why I want to bring this one up in particular is because I think I sent you the email that showed this one company has been able to the the graph of the printout actually showed like the cost per kilowatt hour compared to nuclear,
Uh-huh.
right? And what they were able to do was they were able to use all the, fracking and horizontal drilling techniques to essentially make geothermal energy a real viable thing. And what I like about
Oh, yes, you
geothermal,
passed me that article. Yeah, yeah.
right? This is a geothermal company specifically,
That made
right?
it cheaper than nuclear.
Yes, we're talking way cheaper and way faster. They can drill these wells in like 21 days. So
That's
they can
insane.
get a facility up and running in like a month or two. Do you see what I'm saying?
Hmm.
Like this. So the reason why I want to bring this up now is especially with the data that was recently released at how inexpensive their projects are and how quickly they can do it.
Hmm.
Okay. Like the tech and what they're showing is they're each time they do it, they're getting better, they're getting more kilowatts, it's cheaper kilowatts,
Right.
and on top of it,
So
they're
it's
getting
cheaper
faster,
and better at the same time.
cheaper, better, faster each time
Yep.
they do it. So
Yeah,
the
and
reason, so even though the stock is dipping, I'm seeing the data.
right,
You
right.
see what I'm saying? And I'm going, oh no, this is a buying opportunity.
So, on that note, just a quick look at the technicals. Again, we typically use Fibonacci extensions to portend higher price values for targets, right? But you could do the same thing to look for levels of potential support if this thing is collapsing, right? So we didn't, again, because of the fact that there's just so little data here, you just have to do what you can. And so I use the inverse, they call that inverse Fibonacci extensions to portend the potential bottom here. So if, I believe that this news isn't going to take very long to kind of deliquesce into the markets and for the markets to absorb it. So I'm thinking 2207 is a low. I'm thinking that
And I'm, I'm,
it
I'm a
aligns with
buyer.
yeah.
Look, look, as soon as it hit like 27, I was like, hey, when I saw the data and everything, I was like, man, even if it goes lower, the tech is so promising to me at least, where it's like, whatever, you know
Yeah.
what I mean? Like it was like I did a limit order at 27,
Hmm.
and it's gone lower since, but like then I've seen the data printouts, and I'm like, whatever, like it's
Yep.
$27. You know what I mean? I'd rather be in than like wait till it
Right, right.
gets,
And again,
yeah.
at this price, can
It's
you
not
hold
that
it?
expensive, right?
You know what I mean?
It's
Yeah,
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 exactly.
exactly. So that about does it for our stock selections. Some bangers here, and we also followed up on some of our previous selections for which, we finally see the thesis come to fruition. So with that, I have a fun anecdotal story about, kind of in this theme about, hey, we've gone over selections here on the podcast that are like in integer dollars, right?
Mm-hmm.
$6, whatever. There's some great selections that are in 10 to 20. If you can afford 50, we have you there. We have some
Couple in
selection.
the hundreds,
We
couple in the
have a
hundreds.
couple in the hundreds. So if you're in that position, great. But again, those are maybe a handful. Like it's like less than 10, right? The predominant
Mm-hmm.
focus of our investing strategy has been on stocks. I'd say $10 to $30, right? So if you're a younger fella. And you want some advice from completely unsolicited advice from two unks, it would be to kind of set some set some money aside every so often, be it every week, every month. I have looking back on it, I wish I had somebody who would grab me by the shoulders and shake me and tell me that, right? Because you're probably wondering why this text is up here. Back in the day, I used to be really into car audio, and I had these big subwoofers, and that I was one of those guys. And I had an amp, obviously a huge amp for the subwoofers, but I had speakers inside the car, the front speakers, the rear speakers. Each of those had their own amp. So every time I got one, I was all excited, and I would tell Zach, "Hey Zach, I got this amp. It has 250 watt, 1,000 watt, blah blah blah." And he's like, "But didn't you just buy an amp?" And I'm like, "No. This one's for the front speakers."
Right,
It's like,
right, right.
"Oh, no. Now this one's for the back speakers, right? The rear
Mm-hmm.
speakers." And he's just kind of like, "Okay." So,
Doesn't
rewind.
compute for me. Doesn't.
Yeah, yeah. So it's just like rewinding that and just like the evolution of my mentality. And, I'm obviously taking responsibility for that mindset, but I do see this a lot. It is impressed upon the young people. I obviously didn't have a very good role model in terms of a father growing up, who would just completely ape and spend every single penny he had on just random bullshit. But that is part of the culture too. If you listen to the music, it's all about flashy shit and showing off and stuff like that. So I
Yep.
wasn't entirely, completely guilty, but I do take my responsibility in that. And when I look back on all the stocks I could have gotten, like Google at $10, for example. This
Hmm.
was back in like the late 90s, early 2000s, right? Where we had these tech giants who were still in, the single or double digits, right? And if I would have just done that, I probably would be in a position where I wouldn't be doing this podcast at all. I'd be on a beach somewhere. So,
Yeah.
uh,
Uh,
yeah,
well, you still go on beaches anyway, but
I
yeah,
do, but
the
yeah, yeah.
lesson learned either
Yeah.
way. But yeah,
Yeah, listen, learn. I would be I would be even wealthier than I am today. So,
look, it's like I was joking with Danny. I was like, look, Danny, if you just did a little less cocaine,
Oh
and
yeah,
then
that
you
too.
took
Yeah.
that money and you
Right,
put
right.
it into
So by
MNR
the way,
or something else like that, like that would actually have big long term
and we
like
would never
payoffs.
tell you
All right,
not to do drugs or to give up doing drugs. We just want to say, hey, maybe you could do less and
right.
put that aside, put that money
Hey,
aside. Do two baggies in a weekend instead of three.
kid,
You could
kids
spare
are
one.
kids are gonna do what kids are gonna do, right? So that's true. But to be fair, instead of buying extravagant things or aping into SpaceX, for instance, right? If they listened to this podcast and
Yep.
found some of these picks at integer levels that have huge, like
Yep.
huge upside potential, especially given the current geopolitical and energy regimes, yeah, by the time they start in their 20s with a small paycheck and they just $100 a month or whatever accumulated, I mean, by the time they're 30, they could potentially retire.
Yep.
You know,
So
that's yeah.
we have some time. I just want to do one more. Speaking, you mentioned SpaceX. I just can't help myself. um,
Hmm.
and there's an inside story behind this is that relative ha
Yeah.
tried very, very hard to convince my mother to sell not just one stock, not just two stocks, not just buy this particular stock, but sell everything she owned and put it into SpaceX. Right. And I very rarely, I'm not one of those dudes who uses all caps in texts. This time I made an exception. I'm like, no, no, under no circumstances are you to do this. Funny part of the backstory is that this person doesn't have any money to invest themselves because they followed the advice of some internet guy and blew about $10,000 on Tesla.
Oh my. Jeez.
So we have a double whammy here, or triple whammy. I don't even know how many whammies we are of just complete illogic. And this is like asking a homeless person for advice on real estate, or actually even worse, the homeless people coming and telling you about real estate and
Right.
getting in your
About
face
right.
about. Yeah,
Exactly.
exactly.
Yeah.
So
Yeah.
I just kind of wanted to chuckle here as we look at the price of SpaceX just fall to the floor. So yeah,
And it's going to keep on. It's going to keep on dropping.
that's it. Yeah.
As soon as those employees are able to sell and those lockup periods
Oh yeah, yeah,
expire.
because we're still under lockup periods, right? So I want to say that the lockup period was at least a month, right? Something like that. And so once people realize their losses and they're like, "Fuck this, I'm out," we're going to see
Danny,
another leg.
you know what the real fair value of SpaceX actually is?
I haven't even bothered to look into it, but I'm curious.
It's about negative 44 billion.
Right, when yeah, when you factor in their losses, I do know what's funny about that is that there was a lot of people were wondering, well, why isn't this going to be featured on the S&P? And there's some reasons for that, like you need some established track record of the stock price and so forth. But you
Profits. You
also
need
need positive
profits.
profits. You need
Right.
at least 2 quarters of positive profits, and they haven't been able to do that.
Now, what does that tell you about? Let's compare. Okay, so you said you could buy Google at 10. Remember?
Right.
Okay. The last one that we covered, FRVO.
Hmm.
Okay. Think about that could drop to 10. What is that? I'm telling you though, I'm real bullish on this tech, and they're the only
Correct.
company that can
Correct.
do it. So I'm
And
like 10.
just like Google was the king of that whole tech era that, brought us 20 years. Again, I do think that we're seeing not only a sector rotation in terms of just the economy, but we're seeing a paradigm shift that's going to last for generations starting right now.
Hmm.
So
Yep.
yeah, I guess we can end it on that note.
Yep.
Yep.
Okay. It'll be good though. Well,
Yep.
no, it'll be good to like come and reference this. Let's say like 3 years from now, and
Yes.
then see
Yeah, I'm
what they've
actually
done
going
since
to
then.
edit the clip and be like, yeah,
That'd be interesting.
yeah,
That'd be
yeah.
fun.
Told you so.
Yep.
All
Hmm. Yep. Or
right,
not,
take.
but that's okay. You
Hey,
know.
hey. I'll admit, I've been right so often on this podcast in particular, but just in general that I'll admit when I'm wrong. It happens. You know,
Yeah.
it's gonna happen to you
But
too. You know.
yep, it happens. Part of the learning curve.
Yep.
So,
All
all
right.
right, Dan.
Take care, guys.
See you. Bye.